Good morning and welcome. You're watching Market Cafe on ET now. Let's quickly take you through all that's happening in global markets, and through the hour we will also take you through all that's happening in domestic on the macro front, as well as key announcements by companies. The WPI number also come in very interesting. Some Chinese data we are awaiting as well. But first, to the global news. Let's talk to Ankita, my co-anchor, Ankita Saxena. She's going to take us through all that's happening in global markets. Good morning, Ankita.
Good morning to you, Harsh, and good morning to everyone. Now, the big news coming out of US is the fact that US President Joe Biden will be meeting the opposition on the debt ceiling negotiations. So that's something that the investors are really watching out for. And on the back of that, all the major indices, though, ended the day in the green. Ahead of the debt ceiling negotiations, were largely flat. Even the stock futures are flat right now. Dow Jones was up 0.1%, S&P 500 was up 0.3%, and Nasdaq inched up a little, was up more than 0.5%. But Treasury Secretary Janet Yellen reaffirmed that US could run out of money to pay the bills by early June. So that's the big commentary that came in yesterday. Now, as of now, all eyes are, of course, on the meeting that Joe Biden is having with the Congress and the outcome on the debt ceiling negotiations. Moving on to the European markets were mixed. The Pan-European Stock 600 provisionally closed 0.2% higher. European Union's executive arm also raised its forecast for inflation for the euro area to 5.8% this year and 2.8% in 2024. And it also said that it expects the European Central Bank to continue with rate hikes, further weakening the lending conditions. And it also revised its GDP estimates higher, forecasting 1% growth this year from the previous estimates of 0.8%. Now, DAX and CAC ended the day absolutely flat. FTSE was up 0.3%. But that's the handover. Largely flattish handover coming in, Harsh.
Well, yes, absolutely. So markets going nowhere, at least at the moment. Fears with regard to the debt ceiling limit extension continue to be at the forefront. And surprisingly, though, oil, rose just quite a bit. We saw WTI go above that $71 a barrel mark. That's quite a sharp gain for oil, and we also see Brent just below the $76 a barrel mark. A couple of factors playing out. There is around 300,000 barrels per day which has been taken off the market due to wildfires in Canada. So that's one moving part. And we also saw a bit of cool off in the dollar index. It cooled from 102.5 to 102.2. And that kind of saw oil inch up a little bit. So that's aided oil a little bit as well. So those couple of factors playing out, and oil just rising by 1% or so. Of course, nowhere compared to the fall, but at the moment, any rise is a positive for oil. That's the way we look at it.
All right, Harsh. Then let's quickly look at all the events that we need to keep an eye out for. Amongst the global cues, we have the US industrial production data, US retail sales, UK jobless claims, and China industrial production numbers that will be coming out today, and we will be tracking that very closely. Also in the earnings corner, we have a Vodafone, PLC, Siemens AG, Home Depot that will be coming out with their earnings. That is in the global earnings calendar. And on the domestic front, of course, we have Bharti Airtel that will be coming out with its Q4 earnings as of today.
Well, absolutely. Let's quickly move to global headlines. US Treasury Secretary Janet Yellen has reiterated that the country could run out of money to pay its bills by June the 1st if the Congress does not raise or suspend the debt limit. She said that waiting until the last minute to suspend or increase the debt limit can cause serious harm to business and consumer confidence.
The Turkish lira dropped to a 2-month low, and equities stumbled as the nation's tight presidential election gears up for a runoff vote, with incumbent President Erdogan in the lead. The lira weakened to 19.7 versus the dollar, eyeing its worst trading session since November.
Well, an investment behemoth, Berkshire Hathaway, declares that they have started investing in Capital One while exiting four other investments as it cut back its exposures to equities. The company also revealed its stake in Diageo plc, which is a beverage company. Meanwhile, Capital One shares rose 5.4% in after-hours trading following the disclosure.
And in more drama with Elon Musk, the Tesla boss has expressed concerns over the company's hiring practices. He added that he needs to see a list of all the VP's hiring requests once a week to gain better understanding of the processes. Tesla staffers read the email as either a soft hiring freeze or a signal that Musk is renewing his focus on the car company.
Well, and tech giant Microsoft finally gets a green signal as EU regulators approve its $69 billion acquisition of Activision Blizzard. This comes just weeks after UK regulators blocked the acquisition. EU stated that the deal won't stifle competition for popular console titles.
Once a digital media darling, Vice Media Group files for bankruptcy protection after years of financial troubles. A consortium of Vice's lenders, which include Fortress Investment, Saurus Fund Management and Munro Capital, is looking to acquire the company following the filing. The company, once valued at $5.7 billion, had been restructuring and cutting jobs across its global news business over recent months.
Well, and switching to politics, Russian officials denounced comments by French President Emmanuel Macron that Moscow was becoming subservient to China, saying Western countries must get used to a world underpinned by the Kremlin's close ties with Beijing. The Russian criticism focused on an interview Macron gave to a Paris daily in which he decried Kremlin's isolation brought on by its invasion of Ukraine more than 14 months ago.
And Ukrainian President Vladimir Zelensky was in Britain on his whirlwind European tour as Kyiv's ally promised to give the war-torn country hundreds more missiles and attack drones in an effort to change the course of the war. It's Zelensky's second trip to the UK since Russia invaded Ukraine in February 2022. Zelensky thanked Britain for its support so far and said that Ukraine were in way of preparing very important counter-offensive steps. Speaking together with UK PM Rishi Sunak, he declined to go into detail to not compromise the operation. Zelensky also met French President Emmanuel Macron at the Élysée Palace in Paris. The Ukrainian president had travelled from Germany earlier, where he met the German Chancellor and the country's president.
Right, with all of that happening globally, let's slip into a very short break. More on the other side. We'll go a bit on the domestic front. Welcome back. You're watching Market Cafe on ET Now. Let's quickly move on. Let's look at or take stock of what's happening in Asian markets. What we're currently looking at is we're awaiting some data coming out of China with regard to their industrial production, retail sales, unemployment, among others. Largely expecting to see good data come through because last year, April, was a poor month for China activity. So this time around, expecting to see a bit of a bounce, and on the back of that, you can see most Asian indices trading in the green as we speak. You can see the Nikkei up 2/3%. We also see Kospi up 1/3% or thereabouts. The Hang Seng also in the green, 2/3% higher. We're seeing at the moment slightly negative bias coming in with regard to the Australian index, the ASX 200. The Shanghai as well as the ASX 200 largely flat, but other than that, we're seeing gains across the board. So that's a positive. And of course, the global handover was a positive as well. So we're seeing green on the US markets, flat but green nonetheless. So that is pouring into the Asian markets as well, that sentiment, and you can see the SGX Nifty up around 1/4% as well, so signaling a green start for the Nifty at least at the moment, Ankita.
All right, Harsh, a green start for the Nifty then it is.
Right. Let's take a quick view of the experts who came on our channel yesterday. S. Naren, who is the ED and CIO at ICICI Prudential AMC, states that the only reason banks have not done well is because of fund flows. Let's listen to what he had to say.
The only reason banks haven't done well is because the flows have not been very high. Even today, if you get $10 billion from FIs, I'm sure $4 billion to $3 billion will go into financials. And that is the challenge at this point of time, is that the flows have not been very large. If the flows had been larger, I can assure you that you will have a situation where financials would have done well. Again, I can tell you, if you're going to have $10 billion of outflow or even local outflows in a big way, financials will do badly, not because of fundamentals, but because of the fact that you have a situation where people will have to sell financials. See, I do agree that you're not going to see a situation where credit growth, net interest margin, and NPL, that entire combination will be as good as where it is today. But normally at that point of time, you'll see record valuation that we are not seeing. So that's why we are in this more neutralish view. While we do believe that the cycle of NIM, NPL and credit growth is good, valuations are not at record at this point of time. Valuations are more reasonable.
All right, then it's time for us to slip into a short break. Don't go anywhere. We'll be right back. Welcome back. Here watching Market Cafe, and the big news that has been doing the rounds is the fact that the Supreme Court had adjourned the hearing of Securities and Exchange Board of India's plea seeking more time for the investigation of Adani Group companies over Hindenburg Research allegations. Now, the Apex Court was hearing SEBI's plea seeking additional 6 months of time to complete its probe. My colleague Sumit Chaturvedi filed this report earlier. Let's take a look.
So in the latest, Supreme Court has adjourned the case that was linked to SEBI and Adani. In this, SEBI had asked for 6 months extension, and today the hearing was to take place. Last Friday, Supreme Court judges and the bench headed by CJI Chandrachud, they said that SEBI can't be granted 6 months extension as desired. It can be granted 3 months extension, but today the hearing got adjourned. Today in the morning, in fact, SEBI had filed a rejoinder saying that all the allegations made against SEBI that it has been investigating Adani Group since 2016 are baseless. SEBI also said that it is in touch with 11 regulators throughout the world that are helping in this case, and also it has probed around 51 GDRs that are linked to various companies, and none of them has been found to have name of Adani in this case. So these are the latest development in the whole issue that dates back to nearly January this year, when the rout in Adani shares led Supreme Court to form two committees. One committee headed by Judge Sapre, and that was to submit its report in 2 months. That we understand that this report has been submitted. On the other hand, the SEBI in April sought an extension on that report submission, saying that it needs 6 more months extension, which was rejected on Friday by the bench headed by CJI Chandrachud. Now it is to be seen what happens in the case next. But SEBI has clearly told the judges, also the Supreme Court also, any premature investigation into the case will not serve justice to the whole issue. So these are the developments that have taken place in Supreme Court regarding Adani and SEBI case.
Right, thanks for that, Sumit. Let's quickly move on. Wholesale prices fell for the first time in almost 3 years since April of 2020, and in April of 2023 it's actually gone negative now. Minus 0.9% is where the WPI inflation has come in at, and that's also on the back of a softening of global commodity prices brought down by food, fuel as well as other input costs for producers. WPI has been on a declining trend for the last 11 months, and a negative 0.9% is definitely to a certain extent a positive. This is the lowest level of WPI since June of 2020, when inflation was at 1.81%. WPI inflation was at 1.34% in March. The high base of 15.4% in April of 2022 has also contributed to the bit of a decline that we've seen in wholesale inflation in April of 2023. April has also seen an easing in prices across commodities, food, non-food, fuel and power, as well as manufactured items. The deceleration in WPI comes in line with the easing of April retail inflation, which also came in at an 18-month low of 4.7%. The drop in headline inflation also boosted financials and bonds, with both recording sharp gains on Monday. The yield on the 10-year benchmark of the Indian government fell to below 7%, increasing the value of banks' bond portfolios. Right.
And Jayesh?
Right. So Jayesh Mehta, who's the MD and India country treasurer, Bank of America, believes that the US Federal Reserve may resort to a rate cut in the last quarters of this financial year. Listening to all of his views.
I don't think we really look at the rate cut at this juncture, but you never know. I think first quarter, which looked like completely away from the rate cut, I would give now maybe 50% probability of a rate cut in first quarter of 24 calendar. So last quarter of this financial year, we might see a rate cut. Hopefully, if the things settle down much better. So for US cutting the rate, we don't need to really cut the rate, but then, the focus might actually move to growth and the balance growth and inflation focus can kind of bring a rate cut in first quarter next year. Of course, there are some people in the market looking at December quarter also rate cut, which I don't think so, but you never know what can happen.
Welcome back. You're watching Market Cafe on ET Now. It's that time of the show where we take you through all the stocks that will be in news, or is already in news before the start of trade today, and which you need to keep on your radar. And we have Ansh, who's going to take us through all those stocks. Ansh, good morning.
Hi, good morning, Harsh. So first up, we have Wipro's Full Stride Cloud Studio, which has partnered with Google to accelerate clients' journey to the cloud. Apart from this, HCL Tech will also be in focus as the company has recently expanded its long-standing partnership with SAP to drive digital transformation for enterprises. Cipla has announced the sale of its entire 51% stake in Saba Investment to Shibam Group Holding for $6.5 million. In terms of earnings, Coromandel International reported a substantial revenue growth of 29.5%, although their net profit was down by 14.9%. Astral Limited saw a moderate revenue growth of 8.3% and a significant increase in net profit by around 43%. Lastly, Pfizer also experienced a slight growth in revenue of 4.2% with a marginal increase in net profit of 3.1% to 130 crores. So keep an eye on the stocks.
All right, Ansh, thank you so much for that. We will be keeping an eye out on all these stocks that you mentioned. And moving on, then PVR Inox has reported a net loss of 333 crores for Q4 FY23. The multiplex chain operator also has plans to shut down 50 cinema screens over the next 6 months. My colleague Lisa is here with more details on this. Take it away, Lisa.
Well, yes, PVR has reported their Q4 numbers, and it's a mixed set of numbers because the revenue that was up around 103% on year-on-year basis. It stood at around 1,143 crore. Well, talking about the EBITDA, that came at a loss of around 526 crore versus 432 crore, while the net loss that tripled versus the last year. Net loss stood at around 334 crore versus a net loss of around 105 crore last year. Talking about the footfalls, there were 30.5 million movie buffs that visited the cinema during the quarter. The average price also was higher at around 239 versus 232, which is marginally higher, while the average food and beverage spend per patron, that stood at around 119 rupees. But the occupancy, that has fallen to 22.2% versus 25% seen last year. And talking about the screen addition, they added around 79 screens across 13 properties, and they also plan to add around 150 to 175 in FY24. But what the management highlighted that they will be shutting down 50 cinemas in over the next 6 months, and these are the properties that are loss-making or housed in malls that have reached the end of their cycle. So, well, they have taken an accelerated depreciation for this. Now, commenting on the results, Mr. Ajay Bijli, the Managing Director of PVR Inox, he said that the year was full of volatility, but what marked the performance in FY23, which was the underperformance of the Hindi films and also less number of Hollywood release, that is expected to ease out in FY24. So that was on PVR with its result, mixed set of numbers from PVR.
Right, thanks for that, Lisa. Let's quickly look at the key takeaways Nuvama has listed out from the Saregama management meet. The company aims to seize 25 to 30% of the market share for incremental content. They also indicated a big budget film, music releases that are all slated for FY24. Vinny is here with all of the details. Vinny.
So interesting highlights that have come in from the Nuvama meet with Saregama management. Firstly, each year the content has started improving, the value of content is also improving, and the content with value of 800 crores is made available each year is what Saregama is highlighting. They are aiming to seize a 25 to 30% terms in market share of the company for incremental content as well. And furthermore, let's not forget, the penetration that is increasing for digital content, higher use of mobile penetration as well, piracy that is seeing a reduction as well. These are the key factors that could come into play and drive the growth for Saregama going forward as well. Other than that, what Nuvama is also highlighting is that whatever music it acquires, its impact will be visible 12 to 18 months down the line as well. The management has guided lower marketing expenses for a few more quarters, as well as they are going to be focusing on neutral demand pull till the sales volume grows sharply for the company. Also, the latest variant of the Caravan is at a lower price point, which is aiding the penetration into further smaller markets as well, where they were not present in. And also, management is indicating big budget films in releases in FY24 as well. Key growth levers obviously is going to be the penetration that is evolving as well, increase in subscription businesses, which is increasing on the digital platform as well as the shift in ad revenues from traditional media to digital media will be something that will be a growth driver for Saregama going forward as well, and improved visibility in terms of the revenue in TV films as well as revenues from ad and multiple releases is something that is keeping Nuvama positive on Saregama.
All right, Vinny, thank you so much for those details, and we'll move on then. As the Go First saga continues, ticket prices continue to trend higher. My colleague Somit joins us with the fine print of all the changes in the ticket prices. Take us through the ticket price changes. Over to you, Somit.
Well, if you see, Go Air had shut down its operations on May 3rd, but when it announced its shutdown, we had seen a drastic rise in the ticket prices, especially for the routes where Go Air was servicing. They were servicing on nearly 45 of the routes. However, this has now settled down given the fact that other airlines have also increased capacities on this route. But if you continue to see the fares, they still continue to be on the higher side as compared to what the usual ticket prices are. So what we have done here is that we have been taking the 7-day forward route prices of on the routes where Go Air was servicing, and we have taken an average price of what it has been for the last 7 or 8 odd days, and we have compared it with the usual ticket prices. So what we are understanding here is that the ticket prices for the Delhi-Leh route has increased the most by around 10 to 14,000 rupees, and for flights that are on and off coming from Srinagar or Jammu, the average ticket prices or the current ticket prices have increased by more than 4,000 to 8,000 rupees. Now this is compared with the usual ticket prices and the current ticket prices that we are currently seeing. Along with this, the Delhi-Bagdogra route has also seen an increase in the ticket prices by around 4,000 rupees. But it's not that all ticket prices, on all routes, the ticket prices are higher by more than 4,000. There are some routes where ticket prices have increased by mere 70 rupees or 700 rupees. Like for case Goa-Delhi route, the ticket prices are higher by only 80 rupees. The Delhi-Goa route ticket prices are higher by only 106 rupees. And then there are routes like Bangalore-Goa, Bangalore-Delhi, where the ticket prices are higher by only 700 rupees. Now this is the average 7-day forward ticket prices as compared with the earlier ticket rates when Go Air was operational. Apart from this, we also check the ticket prices on the 20 top routes in India, and what we are understanding is that the 2-month ticket prices are largely stable at this moment. There has not been a much bigger hike coming in for the 2-month forward booking, while the 7-day forward booking has seen some increases in the range of around 1,300 to 3,600. Delhi-Pune route has seen the highest increase of around 3,600 rupees. Then there is Pune-Delhi, where the rates have increased by around 2,400. Then there is Delhi-Chennai, Delhi-Bangalore and Mumbai-Bangalore, where the routes or where the ticket prices have increased by around 1,400 to 2,100 rupees.
Right, thanks for all of that, Somit. Let's quickly move on though. Astral reported its Q4 numbers with an uptick seen in revenue as well as EBITDA. The plumbing as well as paints and adhesive segment reported historical high top line as well. Vamakshi is here to break down all of those numbers for us. Vamakshi, good morning.
Well, good morning. Yes, Astral reported a record revenue as well as EBITDA for both its plumbing as well as the adhesives plus paint segment. Now, FY23 total volumes also came in 19% higher. So, as a result, we're seeing a very strong uptick as far as the revenues are concerned, 9% up and coming in at 1,506 crores. Now, moving on to the operational profitability of the company, the plumbing EBITDA per kg has jumped significantly, and that has come in on the back of two major factors, that is elimination of inventory losses as well as a favorable PVC mix. Apart from that, the adhesives plus paint margins have also seen a sequential recovery on the back of lower RM costs, and as a result, EBITDA did see an uptick of almost 43% on a year-on-year basis, and the margins also have improved significantly from 15.6% to around 20.5%. Now, historically, they've been in the range of nearly around 15%, so this is a sharp bump up as far as the margins are concerned as well. As a result of all these factors, net profit is also coming almost 46% higher. Now, as far as the capex plans for the company are concerned, Bhubaneswar plant is gearing up and will be fully operational with all the products including CPVC. Given the robust demand that they're seeing in the southern market, they're also planning to set up a new greenfield plant in Hyderabad, which will be completed in a phased manner by FY26. Now, as far as the valuations are concerned for this counter, the stock is trading at a PE multiple of almost 71 times, which is in fact coming in at a premium to other peers. So a strong set of numbers, but the stock is trading at a premium as compared to its peers, and that is the reason why the stock is in focus today.
All right, thank you so much for that, Vamakshi. Airtel is all set to report its numbers. A revenue uptick is on the cards, and commentary on the 5G rollout will also remain in focus. Let's go across to my colleague Somit for more details on what the street is penciling in. Over to you, Somit.
Well, for Bharti Airtel, if you see, it is expected to be a muted set of numbers. The revenues and EBITDA on a consolidated basis is expected to be high by around 2.5%. Margins are expected to come in stable at 51.4%, but it is the India mobile business that is a key number to watch out for. And there, if you see, the revenue growth expected by the street is around 1.5%, which is the lowest in the last 10 quarters. And this is because of an absence of a broad-based tariff hike that we had seen. Now, the India mobile EBITDA is expected to be higher by 2%, and this will be largely on the back of a marginally higher ARPU and marginally higher subscriber base in the fourth quarter of FY23. Now, the ARPU number that is expected to come in at 196 rupees as against 193 rupees, and whatever growth that we will be seeing in the ARPU number will be on the back of the hike in the minimum recharge plans that Bharti Airtel had taken. However, do remember that the hike was taken in a staggered manner, and hence the entire benefit of this hike won't be realized in the fourth quarter, and that will be realized in the first quarter of FY24. Apart from this, the broadband business and the enterprise business are expected to see a robust revenue traction in the fourth quarter, while the DTH business is expected to report a weak set of numbers on a sequential basis. Apart from the results, what to watch out for from Bharti Airtel numbers will be the commentary coming in for the timing of a tariff hike, because that is the key factor to lead growth for Bharti Airtel going forward. Along with this, what has been the emerging trends that the company has witnessed on 5G rollout, how many subscribers they have been able to get on 5G, and what is their capital expenditure plans going forward will be important to track from Bharti Airtel earnings.
Right, thanks for that, Somit. Vamakshi has been going through all the brokerage notes that have come through. Vamakshi, take us through the important ones. Which ones are, really catching your eye?
Well, absolutely. Let's first look at Polycab. We have a note that has come in from Jefferies, and they believe that the strong execution for this counter has continued yet again. B2B demand is looking quite strong, and that is led by private capex as well as government measures. And in fact, they view Polycab as a beneficiary of infra capex as well as the housing revival. So, given all these factors, Jefferies has actually maintained a buy rating on this counter, and in fact, also hiked its target price from 3,630 to 4,290 per share. Berger Paints is the next one on our radar. We have two brokerage notes. Morgan Stanley has maintained an equal weight rating with a target price of 611 per share, while Macquarie has maintained its underperform rating but nevertheless hiked its target price from 480 to 510 per share. Morgan Stanley believes that the Q4 was below estimates, mainly due to higher ad spends. FY24, they're looking quite confident as far as demand is concerned. They're also appearing to be quite confident on margin recovery. Macquarie believes that Berger Paints did see a slower Q4 sales performance versus Asian Paints, and they also have highlighted that Grasim's entry does remain a concern for them, so which is why they have come out with an underperformed rating. Apart from that, lastly, we would be watching out for HDFC Life. We have a note that has come from Macquarie, and they believe that the company is confident of achieving a 17 to 20% growth in EPE as well as VNB. The management has reiterated their growth irrespective of regulatory changes as well as heightened competitive intensity, and that is the reason why Macquarie has actually maintained an outperform rating for this counter and given a target price of 655 per share.
All right, we will be keeping an eye out on all the stocks that you mentioned, Vamakshi. Thank you so much for joining in. S. Narain, who's the ED and CIO of ICICI Prudential AMC, does not think that the Indian market is either in greed phase nor in the fear phase. Rather, he feels that the Indian macros look rather robust right now. Let's listen in to what he had to say.
I don't think we are in greed. If you have greed, you will have huge local mutual fund inflow. If you look at the mutual fund inflow data in April, it was one of the lowest in recent times. And if you look at most of the new fund offers, the new fund offer collections are also not very high. So we are not in greed situation like what we had in 2021. So we are neither in greed nor we are in fear. So we are somewhere in between. So we are in a moderate return environment is what we think at this point of time. So we don't need to be at two extremes always. We can be somewhere in between also, isn't it?
On the macro picture, Naren, what is your take? Worst of inflation is behind us. Would you agree that? And if that is true, what does that mean for equity and bond market?
I think the macro picture is fantastic. If you ignore anything that can happen in future, because if you look at the current account, for example, which is one of our most important indicators, we used to fear about current account last year in this phase, and the trade deficit, which we look at not just goods, we look at goods and services put together. That number was looking pretty negative, and over the last 3-4 months, if we look at trade plus services, that number looks much more comfortable. That we have ceased to worry about current accounts. So that's one thing which is gone. If you look at inflation, I would say that inflation worries are lower, but in the way inflation index is constructed, we have to keep in mind that we are talking of just ahead of monsoons, and people are scaring us on account of El Nino and things like that. So that we have to little bit worry about monsoons, and therefore, but at this point of time, oil is the other product we always worry about: oil, coal, fertilizer. I think that basket, the worry has kind of disappeared. So I would say that, in fact, OPEC is forced to cut production to maintain prices. So which means that we don't need to worry about it. So I would say that that is a worry which is lower. I think the superb steps taken by the government in terms of improving the digital footprint to improve compliance in direct tax, the kind of GST collections that we are getting at this point of time, all those things are certainly helping tax collections. That I would say that the fiscal situation is reasonable. So on the whole, I would say the macro is the biggest positive at this point of time. And I would say that, unlike other countries which overdid the fiscal and monetary bit in 2020-21, we did not, and that's why we don't have the inflation problems that the Western world is staring at it over the last 1 year. That's why the macro is not the problem at this point of time.
Naren, in the overall scheme of things, what to your mind will be the importance of the election cycle? Simply because today we are acknowledging it, 6 months from now few will start talking about it, and in May 2024 everyone will talk about it.
Preparing for this meeting, I was just thinking, if you look at 2003-4, 2008-9, 2013-14, 2018-19, you had a situation where all the years you had volatility. And what that means is clearly, funds which benefit out of volatility, like hybrid funds, will definitely benefit because you have seen volatility in all the election years. And there is absolutely clear that volatility is given in election years. If you go back and look at 2003, 2003 markets were dirt cheap. And 2003 kind of market we are not seeing at this point of time because market is no longer as cheap as they were in 2003. They are much, much more overvalued compared to 2003. To factor in 2003-4 is impossible. So I would say we have to, when you think of the election cycle, we have to believe that we are going to have some amount of volatility in the next 12 to 18 months. And that is why for us, both systematic investment plans and hybrid investing for lump sum, which is categories like aggressive hybrid equity and debt, balanced advantage, multi-asset, equity savings. These are all the ways to go for the next 12 to 18 months, along with systematic investment plans and systematic transfer plans. Because volatility is not going to go away in the next 12 to 18 months, both for global reasons due to the Federal Reserve and due to local reasons because of higher valuations. And that is how we think when we looked at where we are today.
Naren, as per the last disclosure data, if you look at your funds and if you look at the disclosure data of some fintech and consumer tech companies, ICICI Prudential AMC has been a buyer in them. You avoided this sector for 2022. But do you think right now the setting on the table is attractive to buy into some of these consumer tech and fintech companies?
Basically, in our principles, as you know, we are contrarians, and when we find that companies are getting more attractive on valuations, and many of these companies have done extremely badly in the last 1 year, as you know. And most of those holders which were holding, they actually have been getting out of them in a very, very big way. So we saw an opportunity to look at those stocks as they fell. And they've been the worst performing stocks in the Indian market. And we are not opposed to looking at anything as long as we feel that the embedded value in them becomes more attractive. And that is the framework which we use for investing. And, many of our older sectors, which we were which we liked a lot, many of them have done extremely well. With our open approach to investing, we thought, why not consider them? But if you look at as a percentage of our assets under management, they are negligible. So while the market talks about our investing in them, if you look at the absolute percentages of our corpus, they are very, very small. But yes, we are willing to look at them. We will, if many of the new companies also come in them, which are more, they come at much more cheaper valuations. I don't see why we should not look at them if they come at reasonable valuations.
Right, that was of course S. Naren on the Indian markets as well, among other things. But Chinese economic data has come out. We're seeing industrial production at 5.6% from April of 2022. That's much lower than what most economists on the street were penciling in at 11%. Retail sales also climbed around 18.5%. Again, 22% is what was forecasted. Mind you, a very low base. April of 2022 was when Shanghai was locked down. Growth in the fixed asset investment also slowed. It came in at 4.7% versus the estimated 5.7%. But the urban jobless rate has eased to 5.2% from 5.3%. So that is a bit of a positive coming through. Largely, it seems like a bit of a disappointment on that particular data front, and you can see the Chinese indices in a bit of a retreat, especially the Hang Seng, which was slightly higher in early trade, now cooling off. But at the moment, we're completely out of time on this edition of Market Cafe. From Ankita, myself, and everyone who puts the show together, thanks so much for watching. The market will take the action forward.